Volatile ride for Bitcoin after hitting an all-time high of more than $73,000 last week. Joining us exclusively to discuss the recent highs and lows is Fred Thiel, CEO and chairman of Marathon Digital Holdings. Fred, it's great to have you back on the show. Welcome.
Thank you. Good to be here.
So I'm going to start right there. This incredible torrid rally that we've seen in Bitcoin, what's spurring it and how much of this hinges on the upcoming halving?
Well, I think most of this has been the pent-up demand for the ETF. You had some rotation out of miners into the ETF. A lot of these ETFs haven't even really started marketing their products to wealth advisors. You have very few wealth advisors that actually are recommending it to their clients yet. So we've yet to see the real kind of flow from alternative assets and just retirement accounts, pension accounts into Bitcoin. That will come most probably later this year, early next year. But I think right now what you've seen is a rotation. At the same time, you're seeing people looking at the economy, what's going on, uncertainty in the world, and just some jitters. The other thing that the ETFs now hold a very large amount of Bitcoin, and so there's not a lot of liquidity in the market. So any move one way or another is causing a lot of volatility, which over time will just normalize because as the market cap of these ETFs and the Bitcoin overall continues to grow, volatility will decrease and it'll operate more like a traditional asset. But we have a while to go before we get there.
Okay. And as we mentioned, we have a while to go, and we do have this halving that's coming up. But I wonder, halving, is this going to be good or bad for Marathon? I guess more specifically, what does it do to the mining market, and how do you position yourself for it?
Yeah, great question. So what this does to the mining market is essentially creates a situation where some miners will be under stress. If you think about the mining market in this cycle compared to prior cycles, there hasn't been available credit or an ability for easy access to capital or equipment financing for the non-public miners. And of the public miners, only really the larger miners have had the opportunity to raise capital. And so there's been this race of the large miners growing, scaling very rapidly, and the smaller miners not. So post-halving, I think you'll see the smaller miners come under stress, financial stress, which will enable the bigger miners to consolidate the industry. And we've certainly been very focused on that. We've recently done 2 acquisitions, and we're going to keep acquiring. We have quite a strong balance sheet. We're ready to go as opportunities arise. But, you have to be very prudent. You have to do these things at the right prices. And I think the more stuff will come to market post-halving.
Okay. And it raises the question, how quickly can you build your own capacity to meet forecasts? And perhaps just as importantly, what are the power needs and dynamics of that process as well, at a time where power generation in this country is starting to get more attention as we see generative AI needs beginning to pull on it too?
Yeah, so definitely large-scale Bitcoin miners that have been traditionally building utility-scale sites, 100 megawatts, 200 megawatts, are competing head-on with the AI companies. You saw AWS did a recent buy of a large data center operation site for $650 million. So there's direct competition going on. The advantage Bitcoin miners have, and I think especially Marathon, is we're able to operate with real stranded energy, energy that doesn't have a natural grid connection. So we're able to consume that energy and use it where they otherwise can't sell it. So we rely on a lot of renewable energies, which is also intermittent, solar, wind, et cetera. The other benefit we have is we're a load balancer on the grid. These AI loads are not load balancers. They just consume. They don't shut off. We have the ability to shut off at any time when the grid needs it in response to demand response mechanisms. So when energy needs are high in the afternoons in Texas, for example, we can shut down our systems, free up hundreds of megawatts of power to the grid so they don't have to go buy power on spot markets. They don't have to turn on peaker plants, which are fossil fuel plants. They don't have to do all those things. So there are a lot of benefits to mining over AI. But yes, we do compete, and that's why we're very focused also on international expansion and growing internationally.
Okay.
We're currently operating on 3 continents, and we'll continue to grow.